everyone loves Apple Pay and Google Pay.
Mm.
And if you've ever come back to the point you made earlier, Mike, if you look in Apple Wallet and look at that transaction data, it's way nicer than looking at that same transaction data in your bank. And I prefer to interact with my transaction data there than I do on my bank app. And I'd prefer to use Apple Pay than to get my card out and take my wallet everywhere. So I think it's going to happen in pieces like this, where a third party will attack a piece of what has traditionally been a core banking service and try to own that experience.
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today we've got the co-founder of Akahu, Josh Daniell, here to talk about the future of banking.
We're back in your life, and today's an interesting one. Josh, welcome to the podcast.
Pleased to be here. Thanks for having me.
So, you live in the future, is probably the best way to describe it. The future of finance. This is going to be interesting because I know nothing, you know a little, you know a lot. So We'll see where this goes. Tell us a little bit about Akahu.
Akahu is an open banking intermediary. And I think it probably makes sense to explain open banking before going into what we do.
Okay, let's rewind. Josh, what is open banking?
Open banking is technology that enables your bank to speak to another service.
Yeah.
So think of it like the ability to connect your bank account to another product.
Mm-hmm.
And in New Zealand, the example I go to is Xero, or accounting software, where you want your transaction data to just automatically show up in Xero so that you don't have to manually export it from your bank and import it into Xero.
Yeah.
That is open banking. No one called it open banking because they started 18 years ago before the term open banking was around. But it is just that. It's the ability to share access with your bank account to a third-party service.
Why would consumers want that? And why would banks want that?
For consumers, there has to be some value.
Yep.
So if we go back to that Xero example, you don't want to manually import your data into Xero every time. You just want it to show up so that you can do the bank reconciliation really quickly. Yep. So there has to be some value in it for consumers because consumers have to consent to sharing it. Open banking does not happen without a consumer actively consenting to it.
Yeah.
So there has to be something in it for consumers. Why do banks want it? I would say on net they don't.
Yeah.
Banks don't really like open
Well, it was
banking.
a bit of a loaded question because it's been around in its current iteration for quite some time. Even I was working on it 6-7 years ago, and we were like, "Man, this is going to change the game next year." And then the bank's like, "Yeah, we'll get the APIs going," and then they're up for a bit, and then they're like, "Nah," and they drag their heels on it.
Yeah, and if we could look at that accounting example, that doesn't threaten the bank. That's actually probably good for the bank. Its business customers have, probably a better handle on their business finances if they're using good accounting software and they're getting properly advised. But there are use cases for open banking that very much do compete or threaten with a bank's core products. And that's where I think you start to feel this go slow movement towards open banking if the banks are left to their own devices.
I'm going to ask the silly questions just because I don't understand a lot of this stuff. Have the ability to see your transactions and giving access to it and categorizing. Like I go into my online banking and I can see my transactions. So what changes from current state to when open banking happens?
If it was your own personal account and you wanted to share that transaction data with another service, then you can grant your consent to do that. But the data itself is just moved from the bank to the third-party service. And then that third-party service does whatever they do with it there. So in your world, I think you use PocketSmith for your clients.
We do for a lot of clients.
So that's a way for a customer to say, I consent to my bank transactions being shared with PocketSmith. And in the lending world, you have a way to speed up a loan application if you grant consent to share financial data to simplify that loan application process.
Yeah.
So it's then up to the third-party service to do some work with that data to make it useful.
Yeah.
And so in the loan application space, breaking it down into essential versus discretionary spend, for example, highlighting gambling and other things that may be of interest to a lender.
And fun.
Exactly.
No, so for example, when I was doing it in the UK, the race was basically between Santander and Lloyds because they have quite big market shares of the banking world over there, as to why would you visit Santander or why would you visit Lloyds if you have accounts across a lot of different banks? So what does it look like when you log into, say, the Santander app and you can see all of your accounts, all of your transactions? But then back to Josh's point around what is in it for the customer, why would you pick them and have them as the brand that you interact with over someone else? So that might be you can spend on any card, or like any of your cards, but so long as the transaction comes back through Santander, you get a reward, even though Santander isn't the one kind of facilitating the payment.
Yeah. So I get that piece. That's not, when I think of open banking, that's not the sexy stuff I think about. I think about like the banks being the pipes in the background, and one bank has a slightly lower interest rate than another, or slightly higher if it's term deposits, credit cards with points, whatever it is. And because if we kind of talk as well about like the future state of banking, it is so painful to try and go from one bank to another trying to open a bank account. Is that eventually where this will go, where the banks will just be the pipes in the background and you'll deal with a third party solution?
Yes, and I think that's a melding of both of your points, is that if there is an experience layer that you as a consumer want to use, and it does the hard work of picking the underlying financial products, then there is the chance that banks get pushed down to that commoditized product manufacturing layer. And that is really what the banks are worried about. They want to be the primary financial account. They want to own that experience. But we're moving slowly towards a world where the better product will win, because the search costs are going down. The inertia is going down. The friction to actually find and switch to a better product is decreasing, and open banking is part of that.
Yeah.
So is digital identity. So is AI. There's other technologies that are pushing us in that direction, but open banking should make it easier to compare and switch to a better financial product. And so, to try and illustrate what this could look like, you sign up to a service that says, we'll get you the best term deposit, whatever that is in the market. You sign up with us, create one account, and you've said you want, this much money in a term deposit. We'll just move it around to whatever the best rate is. Whenever it expires, we'll search, we'll move it, we'll tell you, but leave it on autopilot. So it's that kind of automation that can be done now. But I think, deposits are becoming hotter. They're becoming more programmatic, and open banking is part of that.
Yeah. I kind of see it as the writings on the wall for the banks, because they often try to do new things and innovate, but they're kind of too old and too slow moving. They have too much legacy infrastructure and tech where they actually can't keep up. And if you think about that third party layer of the experience, the brand loyalty for other brands in the market is head and shoulders above brand loyalty for banks. If you think about like Apple, for example, how much slicker is an Apple interface than a bank interface? I can bet you 1,000 times down, you would rather interact with an Apple experience for your banking than you would for a bank.
So the question becomes, Josh, like, if this is all there, if this is the future, to Mike's point, I've been hearing this conversation for a bloody long time, and it feels like nothing has happened. Why is this taking so long to actually impact the average Kiwi's life?
So I like to benchmark against what is happening in the market right now. And, unregulated forms of open banking have been around in New Zealand for about 20 years. And there's more than 1 million Kiwis that use those unregulated forms of open banking.
Is Ilion one of those? The bank stays? Yep,
exactly. So if you've done a loan application via an advisor, they probably use Ilion or Credit Sense. And that is a form of unregulated open banking. So is Poly. WinCave have a product. What we do fits into this category too. There's a whole bunch of activity. That has proven out the consumer demand. It's now very clear that people want to do it. Like we talked about Xero earlier. If you build a compelling product, people want to use this open banking thing. Even if they don't know it's open banking, it's just a better product and they want to use it. So that started all this unregulated activity, put the pressure on delivery of a better API experience from the banks. Because, to put it bluntly, the downside with all of this unregulated open banking activity is that the customer has to put in their bank credentials into a third-party screen to set up the connection. And, there haven't been problems with that over the last couple of decades. There will be at some point. And we should move away from that to be able to log in directly with your bank.
Yeah.
And that is the main upgrade that open banking regulation will bring, or purpose-built APIs from the banks.
Yeah.
And so that we can't move to that world until the banks deliver an API for that to happen. And so the question is, will that happen voluntarily, or do we need regulation? And over the last 7 years in New Zealand, we have had the banks working on open banking standards. It has gone slowly.
7 years. 7 years.
But this is not just New Zealand, right? This is globally. All banks are operating basically this. Well, there's probably some that are an exception, but
When you look
if you look in the UK, it's exactly the same. The banks are dragging their heels. Most of the ones in the States, aren't, like the big ones, aren't really doing too much with it. They're like window dressing as if they're doing stuff about it. But they could build this in 12 months if they really had to, from scratch.
Yeah, I mean, the cynic would say that it's been a way to hold the pen on the regulation, but sort of slow down until the regulation is imminent. And the regulation is imminent in New Zealand now. So we do have a bill going through Parliament called the Customer and Product Data Bill. That is our regulated version of open banking. And so that regulation will require banks to have these APIs available. And so this is following what the UK has done, what Australia has done. US is going through it at the moment, where they're going to write rules to say you must deliver APIs that do this kind of functionality. So when that happens, we can migrate all of that existing activity into this regulated system. And that gives the upgrade that no one will need to share login credentials to set up a connection between their bank account and another product.
Just click the button.
Exactly. And the hope is also it'll be more than just the existing activity. It will bring people in from the sidelines that want to do something with open banking, but have wanted to wait until the right time.
Yeah. And how does Akahu fit into all of this? Because we kind of said at the top what you're doing in a little bit, but what is Akahu doing to facilitate this? Where do you fit into the market?
So we're an intermediary, and we're essentially a technology layer that manages integrations with banks and other financial service providers like KiwiSaver and investment platforms, but primarily the banks. And we bundle all of those integrations into a single API.
Yep.
So if you're building a product and you want bank account connectivity, instead of building and managing all of those integrations, you can build to one API, and then we standardize everything from there.
Yeah.
So basically, what we need to do to earn our spot in this ecosystem is to do it better and cheaper than someone deciding to do it themselves.
Yeah.
Very similar to a decision to outsource your infrastructure to AWS or Azure.
Yeah.
What about you talked about other countries, and it seemed like you're alluding to maybe New Zealand wasn't as far behind as maybe I first thought. The scale of New Zealand in terms of population compared to other parts of the world, does that also lead us to, opposed to disrupting companies coming in and rolling out this technology, moving things faster, does our scale slow down open banking and the future of banking?
It comes into play in the sense that if you're looking at this regulation and you're trying to do a cost-benefit analysis, then the bigger scale that you have, the more it sort of tips. And we don't have big scale in New Zealand. That's just the reality of it. But, in my view, this regulation that's coming through has sort of got two key purposes. One is promote competition and innovation, which is often how open banking gets talked about. The other is just equipping consumers with modern data rights. It gets referred to as consumer data rights, this whole bit of regulation. And it's just what it says on the tin. It's giving consumers rights in relation to their data that are fit for a modern world.
Yeah.
So instead of using the Privacy Act, say, please, data holder, can I please have information about me? And then getting a letter back with a response, you can just get it programmatically in machine readable format and easily use it in a third-party service. So it is equipping our economy for the modern world. And this legislation is designed to be more than just banking. So there's current consultation going on with the banking sector and energy or electricity. And this legislation is set up to be flexible so it can be applied to different sectors over time. So it's also a modern pro-competition tool.
Yeah. What's your favorite piece of data regulation, James?
I think it was the 1972 Act.
Mine's GDPR, because it has this clause in it called the right to be forgotten, where you can email a business and be like, hey, under GDPR regulation, right to be forgotten, you need to delete all of my data. And then within 2 weeks, you need to tell me or show me that you have actively removed my data, and I'm not going to get an email. I'm not on your database. It is all gone. And I love that.
Yeah.
General data protection regulation.
That was interesting. Remember we spoke about not making this too technical, Mike, beforehand?
No, but honestly, every time someone says to me now that I've lived in a world where I know I can wipe my data, every time someone's like, do you want to unsubscribe from this mailing list? In my head, I'm like, no, I don't want to unsubscribe. I want you to remove all of my data.
Okay, let's move on. So when is this actually going to, for the average Kiwi, we're talking about rolling out the regulation, then I assume you have to give banks time to actually do something with it.
Yep.
When are we actually going to, are we going to see anything before 2030 on this in terms of impacting the average Kiwi?
So it is worth talking about what is happening in the voluntary space as well. So we talked about the bank-led work to develop open banking API standards, And under the pressure of regulation, there has actually been a little bit of delivery. So on 30 May this year, there's the first API release from the big four banks, and that does a single immediate payment. So it's designed to support the same kind of use cases as you see with Poly or Windcave or Online FPOS. It doesn't do other use cases though. There is another release date which has been announced, which is 30 November this year, and that's for an account information API. So that will start to deliver some of the use cases like Pocketsmith or accounting services or any tool where you want to share your transaction data. So this is happening, and all of these standards that have been developed and the APIs that have been developed to align to those standards is going to migrate into the regulatory regime that we've got coming.
Yep.
And so the regulation is proposing to pick up that work and those dates that have been committed to and just write it down in the regulation. So it is happening. There will be some dates next year, most likely, that will be new release dates for better versions of those APIs. So that's just for the big four banks. Kiwibank has some dates which are in 2026, and the other banks don't have dates yet.
Yeah.
So we're going to live in this piecemeal world for a long time, where there are some purpose-built APIs from some of the banks that do some of the use cases, and for everyone else, there's going to be the existing way of doing things. And so from a consumer's perspective, if you're using a tool like Pocketsmith, some of the connections will be through purpose-built APIs. Some of them won't because they're not available. But those upgrades will continue in the background. So you'll see it as a consumer where if you redirect directly to your bank to log in, then that is a purpose-built API. If you have to log in via a third-party service, that is not a purpose-built API. That's the service using the web or mobile APIs of the bank.
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand-operated, award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below. Having worked for a bank, most things, you tried to add a button to a screen once, and they quoted them like $2 million in like a 10-year build time or something. It was
I wanted a W on the customer profile to go, this person has a wealth advisor, and they'll be like, that would be $1 million. And I was like, for a W? They're like, yep, $1 million. Because it's just all in terms of the systems they've got, right? It's built on this old creaky foundations, and they're trying to make all this stuff work. So do you think banks will end up being just the pipes in the background long term, or do you think they'll continue to own the relationship with the bank, with the customer?
I think that fight will heat up, and I wouldn't want to predict the outcomes, but I think...
Come on, Josh. Don't sit on the fence.
Well, there will be some wins either way, I think. So an example of where the experience has sort of been taken over by someone else, everyone loves Apple Pay and Google Pay. And if you've ever come back to the point you made earlier, Mike, if you look in Apple Wallet and look at that transaction data, it's way nicer than looking at that same transaction data in your bank. And I prefer to interact with my transaction data there than I do on my bank app. And I prefer to use Apple Pay than to get my card out and take my wallet everywhere. So I think it's going to happen in pieces like this, where a third party will attack a piece of what has traditionally been a core banking service and try to own that experience.
Yeah.
One of the things that I find really frustrating about financial services in New Zealand is the lack of competition for deposits. We always talk about lending and rates, but in my mind, there is just no competition for deposits. There is a bit when you get to term deposits because there's, people are price seekers at that point. And so there is an advantage to giving a better rate. But there's about 60 billion in transaction accounts that earn nothing. And there's about 160 billion in savings accounts that earn, say, 3%.
Almost nothing, yeah.
And no one is doing anything different in that space. And this is, again, might be getting a bit too deep, but the Commerce Commission concluded a market study on competition in personal banking services. And one of their key recommendations was we need to accelerate open banking because that can help people to compare and switch to better financial products. But they said, quite rightly in my view, that has to be paired with a maverick. And by maverick, they mean someone that is disrupting the market and offering something that is materially different from the others. So to make that tangible, if you used open banking to compare transactions accounts at the banks, there's not much between them. They all offer zilch. in interest, and they all offer payments and cards. So what's the point in using open banking? There's nothing to gain from it. But if you had a maverick, someone that was offering a good rate of interest on a transaction account, along with the payment functionality, all of a sudden, there's something to compare. There's a reason to switch. And so that's an example of where I think open banking can make a difference in core banking services, and where a new entrant could harness open banking to win some market share before the incumbents can react.
Yeah, and I think our banking industry in New Zealand is almost no different to any other the big monopolized kind of markets where there isn't a lot of competition, and there's always high barriers to entry in kind of markets with monopolies naturally, and they fight to keep people out. Open banking and open banking regulation is really exciting because it drops those barriers to entry. All of a sudden, you may not have to be a bank with X amount of deposits and X amount of capital reserves and this, because actually the banks can still perform that function for you, but you can provide a much better service and a layer on top. Yeah, I just wanted to jump back quickly. We were talking about before where you were saying that open banking allows people to come in and kind of attack different bits of the financial ecosystem or the transaction. And I think the natural defense that banks have there is that, we're all frustrated with them, right? They're slow moving, they're a bit annoying to deal with, and they're pretty cumbersome in the way that they operate. But they've been doing it for hundreds and hundreds of years, and there's a reason why everything is the way it is. It's because they've been burnt before. And if you see people, tech companies especially, coming in and trying to apply that tech mindset of we're going to disrupt everything and change the way we do things and it's all going to be great. If you look at Apple's foray, I think it was it Goldman Sachs into credit cards, and trying to capture a younger market for Goldman Sachs. And they were like, we're going to do X, Y, Z. We're going to do this. We're going to do it differently, even down to the little points of like, we're going to have all of your credit card statements come out on the same day every month. Now, you might not think that's a big thing. You might go, oh, great for the consumer. They get to know exactly when their credit card statements come out, easy to remember. What that means for Goldman Sachs as the bank is that probably 3 days a month, they get about 5 million phone calls with everyone going, what is this transaction? What is this transaction? And it blows their service time out to crap, right? So there is going to be a little bit of give and take. I don't think it's going to be this perfect world where people just storm in and, we've got these amazing products. There is a reason why the banks are the way they are. It's because they've got experience.
One of the responses to new entrants bringing competition and innovation is that will spur incumbents into action. And that's a good thing.
Yeah.
For consumers, it actually doesn't matter on net whether it's the new entrant that wins their business by being better, or it spurs the incumbents to come up to speed and offer something that's equivalent. So the consumer gets that benefit either way.
Yeah.
Yeah. Josh, if we were to fast forward, I don't know how far into the future, say 50 years, what's banking going to look like in 50 years' time?
I find this question so daunting because if you go back 50 years, my Lord, how would you have predicted the last 50 years? So
there wasn't even a credit card.
Yeah.
50 years ago.
About right.
Yeah, there was.
Was that the 60s?
Yeah.
So I had Sue Price, who was worked at Westpac, was a financial advisor in Whangarei. One of her very first jobs at the bank, I've just applied the math on 50 years ago because she worked there for 40 years, retired about 5 years ago, was to decide who got a $200 credit card and who got a $400 credit card. She also had a gun.
Yeah, so my dad had a gun.
Yeah, and they would practice on the top
on the rooftop.
I don't know if I could say this, but screw it. On the top of the branch, they'd practice their shooting.
Mate, the statute of limitations on that has probably run out. Yeah, I think Sue's going to be fine. Yeah, my dad had a gun up the top of Queen Street. It was him with a gun and a security guard with a gun because he was the ATM.
Yeah.
And then there was a gun range underneath one of the banks on Queen Street that they would all go practice at.
Wow. Yeah.
Probably drink whiskey and shoot guns.
Yeah. And obviously all the tellers smoked as well.
Yeah.
So anyway, that was back then.
Imagine if we went full circle and was back to that in 50 years. We all had guns and we're smoking ciggies.
Definitely a scenario, like Armageddon type scenario. I can see that. We're all back to just cash.
Yeah.
Everything's imploded. Anyway.
Oh, it's degenerate.
Yeah.
So the thing that I feel strong conviction about is that a lot of the work will be taken out of getting a consumer matched to the right financial product. And we talked about this earlier. I think you can already see signs of it, but there's still a lot of inertia when it comes to switching. And, you see this in the stats that get published about how often someone changes their primary bank account. You see it a bit more with mortgages because the dollar value associated with a switch can be very high, depending on how things have moved since the last deal was set. But it should be easy to move for small dollar values if the inertia is lower. And this is where open banking plays a role with comparing and switching. It's where digital identity plays a role. If you have to onboard with a new service, then that should be far less frictionful than it is currently. And then AI also matters here. Like if we're going to move to a world where AI is working on your behalf to at least recommend products, if not take the action for you, then the AI isn't going to be swayed by some billboard campaign that says, we're in this together, or some vague, fluffy message.
You don't want to change that to
service.
Yeah.
That like there has to be, it has to be a better product for the AI to care. And it's going to do an objective analysis and say, Michael, James, here's the product that is better for you. Here's the dollar value that you'll get from click and go on this button. Do you want to do it? So I think that the work to find better financial products and switch them is going to reduce over time.
Yeah.
Obvious follow-up question. I don't know if you can handle this. Future financial advice. Will financial advice exist in the future, or will it all be AI?
I think there will always be a market for human financial advice. I think it will be increasingly augmented by digital tools. And those digital tools will also reduce the cost to serve. And so financial advice will be available to a bigger and bigger market over time. And people will be able to jump in at price points that reflect how much human there is. One of the things that, I think is true for 2024 is that a digital tool could crunch data and give you some advice, but will people act on it? In my view, only a small portion of people would act on advice from a purely digital tool. The human augmenting that process can give comfort, ask questions, embolden the action, and the action matters. I think over time you'll get more and more people that are willing to do things purely digitally, but I think there's still going to be a place for humans to be involved in wealth management. But there are some parts of financial advice which I think are more prone to being fully digitized. One is just, price discovery for loan rates, for example. That really shouldn't be something that you need a human to do. And for the human, that also, isn't necessarily productive time spent. It is at the moment because you can get a better rate than just the rack rates. But what if you could spend more time thinking about the structure of that mortgage, or wrap around financial advice for the client rather than making calls or writing emails and seeing what rates you can get that are different from rack rates?
Yeah. The cynic in me goes, the move to like more a more digitized or more digital AI driven service is a shame for consumers in a number of ways. And the main way would be that almost removes the ability to play in the gray area. And we've talked about this before, and in my world, it's probably a bit more prevalent than James's world. But
I don't play in the grey.
He doesn't. That's the thing. If you look back, like to
Mike
some of the
lives in the grey.
Some of the people, but most of the time, it's for a better outcome for my customers, and you can already see that the ability to do that is disappearing and disappearing and disappearing. Like we used to have a good friend of ours, first house, he went down the loan, he got a loan approval, went down the road, got a personal loan for the deposit, came back and used it as deposit, and he's fine. We know we had someone else on the podcast who has a property portfolio in the millions, and her first house she bought with the ability to do that, right? And I'm using that as kind of an extreme version, and we don't do that now, but it does make it difficult for customers to take advantage of some of the gray areas and get a leg up and maybe take a bit more risk than the bank is willing to offer. And, that's not always a good thing because you can't just give people unfettered access to cash. But yeah, it definitely does make it harder for people to get ahead quicker.
And this is how Mike calls the GFC.
Yeah.
I just mean that from the perspective of every time a market is tweaked and every time there is another regulation put on the market. I'm not saying regulation's a bad thing, but I'm saying it does make it harder for people to just, get ahead a little bit quicker. And most of the time it's the people who have already used the, playing in the gray area who are making those regulations to make it harder for people after them. That's all. Has nothing to do with open banking, but yeah.
But like coming back to financial advice, one of the really tangible things is just an ongoing fact find. So, you
Yeah.
a lot of your clients are
That'd be
using
cool.
Pocket Smith. That's essentially doing that. So you can collect the data to, help with the initial plan, but you've also got that ongoing data feed, and, you could build tooling to surface events which might prompt a proactive discussion. So you see income has changed, or you see expenses have changed dramatically. Those sort of things could prompt a conversation about insurance or about what's to do with the extra cash. And so that is just an obvious evolution in my mind of financial advice becoming more proactive over time, if the customer or the client is willing to provide those ongoing data feeds.
Well, this is a really interesting space that I leaving this conversation feeling more informed and frustrated. I don't know if that's a good combination of things. Just I want things to happen faster. But it is definitely a space where it will change over time, right? And it will do the right thing for consumers and give them a better experience. It's just the banks will drag the chain as much as they possibly can.
Yep, they will on those purpose-built APIs. But in the meantime, there are, we've got over 50 products that are using Akahu for open finance related features, and you can check them out and see if they add value to your life. There's plenty in the personal finance space, like we talked about PocketSmith, SortMe, Budget Buddy. There are others. There's plenty in the accounting and tax space if you're a business owner. So there's a variety of things that you can use right now that will give you a taste of open banking, and those experiences will just get better as this regulation comes in.
Yeah,
cool.
One thing you don't even think about, which I know we've spoken about in the past, is payroll. So payroll is done through a third-party platform that's then tied to your bank. Then money is paid out. And if you apply that kind of theory to maybe consumer banking in the future, I know there's probably quite a lot to work through there. It does make you go, oh, there are parts of this puzzle that already exist.
Yeah, the one thing I always think about from a really practical perspective is onboarding an AML. My God, do you know how you've just been through this trying to open a business account? Do you know how annoying it is? And it's the same documentation every time for basically the same bank in a slightly different way. I'm like, if I get onboarded at one bank, why can't I be onboarded at all the banks? I know there's 1,000 reasons, but I find that frustrating.
Yep.
Awesome. All right, well, Josh, thank you very much for your time. Much love to Partners Life for sponsoring this episode. Please make sure to subscribe to the channel, give us a review, give us a like, and we'll catch you next time.
Cheers. Cheers.
Cheers.
Cheers.
Cheers.